Good Tuesday morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. The White House says Presidents Trump and Xi will likely talk later this week. Investors watching for a dialing down of trade tensions. China's manufacturing slump. The sector slides to its worst reading since 2022 as US tariffs hit the country's smaller exporters. Plus, Poland's Prime Minister Donald Tusk looks to shore up support with a vote of confidence after his candidate for president crashed to defeat at the weekend. You saw a divergent picture yesterday. By the end of the close, you saw modest losses across European equities of about 0.1%. US markets ended in positive territory, up around 0.4. The divergence continues, but in the opposite direction this morning. European futures pointing higher, modestly higher by 0.1%. US futures, though, pointing lower by between 0.4% and about 0.3 on Nasdaq 100 futures. We'll see how that story evolves. There's been a positive reaction in terms of a bond auction in Japan. That has had impacts across the Treasury markets, a bit of a relief, bit more stability across the Treasury markets, and we'll mark that shortly. FTSE 100 futures here in the UK also pointing to modest gains of about 0.1%. Let's flip the board and have a look cross-asset then with a focus on the 10-year. So you had a longer-dated auction in Japan, well-received, bid-to-cover ratio higher than previously, and you're seeing that reflected across the Treasury markets as well. So 443 right now on the benchmark 10-year. That's after yields actually moved higher yesterday across the curve, particularly at the long end, the 30-year crossing above 5%. Briefly, you're back below that level this morning. Euro dollar at 114. You're actually seeing some gains for the dollar after the greenback fell to its lowest level since about 2023 yesterday. Today, up about 0.2%. That is seeing the euro a little softer at 114. Brent continued to add to the gains that we saw yesterday in oil, up 0.4% so far in the session. And gold a little softer after the gains that we saw yesterday for the yellow metal, currently down 0.5%. Let's cross over to Asia right now. Avril Hong standing by in Singapore, and it's the data out of China that's in focus, Avril.
Yeah, the data and the auction, Tom. We're seeing Asia stocks running slightly higher, tracking Wall Street. That's it. They've been moving in pretty tight ranges. As to your point about the data, we got the private survey of manufacturing activity out of China, which unexpectedly contracted a couple of days after the official print showed signs of improvement. There are a couple of theories out there as to why we're seeing this divergence, which I'll get to in a bit. But we are seeing all that kind of feeding into expectations of stimulus from Chinese authorities that has been typically supportive of Chinese stocks. The Chinese shares in Hong Kong are among those that are gaining today. Keep in mind as well that mainland markets were on a long weekend, so this is the picture that they're coming back to. Japanese stocks have been struggling to rebound after 2 sessions of declines for the board. The other thing that we've been watching out of Japan, the 10-year auction after the 20-year last month really took investors by surprise by how weak demand was. Today's auction for the 10-year showed solid demand and maybe some short-term relief. We're seeing that feel-good factor feeding into across the curve from the 2 years to the 30s. But don't forget, there's still those lingering concerns about not just US, but Japan, fiscal sustainability, whether markets are going to be able to absorb the supply that's been coming through, especially when the BOJ is continuing to take its foot off the stimulus pedal. And don't forget, we also have a 30-year auction that's set for Thursday out of Japan. As for the Japanese currency, we saw a sharp climb just a day ago, a bit of reversal today following the anxiety ahead of the 10-year auction, and it's mostly been holding on to that weakness for the board. As I said, it's also about the data out of China, and we had the likes of Goldman Sachs kind of explaining it as when you look at the private survey, it's actually taken typically earlier in the month than the official print. So that might speak to how maybe the tariff truce not yet feeding into sentiment from some of these manufacturers. But aside from that, it could also show us how the trade war has been disproportionately affecting the smaller export-oriented companies, which is, of course, typically what the private survey actually reflects. Tom.
OK, Ava Hong in Singapore. Thank you very much indeed. Breaking down the China data, the market reaction to that, expectations of more stimulus maybe out of China, and, of course, a successfully received bond auction in Japan. And as Ava said, we'll see if that continues, of course, with a 30-year auction later this week. To geopolitics right now in the trade story, because the White House says President Trump is likely to speak this week with Chinese leader Xi Jinping as the two economies remain locked in trade turmoil.
I can confirm that the two leaders will likely talk this week. And as always, when there are foreign leader calls, we will provide a readout of those calls.
Bloomberg senior editor Bill Ferries is with us for the latest. Bill, we'll just take a step back before we get to the details around this potential conversation between the two leaders and just focus on what the main sticking points are right now between Washington and Beijing.
Well, you've had both sides since that meeting about a month ago between Treasury Secretary Scott Bessent and his Chinese counterpart in Geneva. Both sides now saying that the other country is violating the terms of the agreement that was reached there. The U.S. in particular seeming to focus on what they say are still restrictions on exports of some rare earth minerals that are really hard to get elsewhere and essential for things like F-35 jets, Ford Motor Company production processes, Elon Musk's Android robots. So a lot of industrial processes that depend on these rare earths. The U.S. say they're not getting them fast enough. And then China looks at a slew of measures they've seen from the Trump administration in the past couple of weeks, including additional restrictions on Huawei, restrictions on chip design software, and reportedly restrictions on jet engine parts that it can't get elsewhere. They're saying the spirit of the agreement was broken. So both sides starting to ramp up their rhetoric about was or what was not achieved in that meeting in Geneva, and looking for perhaps a little bit of leverage or negotiation from the other side.
OK, and as President Trump, of course, looks towards that potential phone call with his Chinese counterpart, he's also focused on domestic issues, notably his, quote-unquote, big, beautiful bill that is now working its way through the Senate. And we know that he's been wrangling, arm-twisting some Republican senators to try to embrace this tax bill. How much division is there within the Senate, and where do those conversations stand?
Well, when that House bill first passed, it wasn't pronounced dead on arrival in the Senate, but it was definitely an intensive care given the number of senators who were protesting different aspects of what the House had agreed to. So President Trump working the phones, trying to get support, but it's very clear that there's some opposition to some of the Medicaid cuts that are proposed in that legislation and how they go about it. There's some senators who are more deficit hawks than even President Trump. They want to see additional spending cuts made that the House wasn't able to agree on. So there's quite a few different issues cropping up. The Senate has basically said they're not just going to pass the House bill. The changes that they make will have to go back to the House for approval. On neither side can Republicans afford to lose more than 3 votes, so the wiggle room is really, really thin here. It sounds like they're still trying to get a bill to the president's desk by July 4th. That sounds like it's a long ways away. It's really not when you start adding up the legislative time that remains. So the Senate trying to put forward a draft bill by this weekend, we're hearing. We'll see how that lands with the House Republicans.
OK, July the 4th, seemingly still an ambitious target. Bloomberg senior editor Bill Ferries breaking down the latest in terms of the movements around the tax bill and the Senate's reaction to that. Bill, thank you. Now, Treasuries beginning June on the back foot. There's a bit of stability today, but yesterday there was a sell-off again. Let's bring in Bloomberg's Valerie Teitel for more. And Val, maybe it ties into the tax bill negotiations. Maybe it ties in to broader, more macro themes around concerns about a build-out of debt and concerns about the long end of the curve when it comes to not just the US, but Japan as well. We had that successful auction in Japan. Maybe that's a factor in terms of the relief that we're seeing across the Treasury markets. Just walk us through where things stand in terms of the Treasury market reaction to these these issues?
Hey, look, it is a more positive session for the Treasury markets thanks to that strong JGB auction. Again, really testing demand for long-end paper. It seemed to go quite well. But again, yesterday's session, Tom, was pretty brutal for the Treasury market. We did see those 30-year yields poke above 5% very briefly in yesterday's session. And the 30s at 5s curves, the 530s curve, that's the difference between the 30-year yield and the 5-year yield, neared 100 basis points. So we're still hovering around the steepest levels in the Treasury curve since 2021. But a bit of stabilization. Remember, we also have another JGB auction this week. We also have 10-year and 30-year supply next week for the Treasury market. So that'll be a key test of demand. But it seems like we're stabilizing at the moment. The dollar is also seeming to stabilize this morning. The Bloomberg Dollar Spot Index is trading higher this morning, up near 0.2%. Some of that driven by some weakness in the yen after some dovish comments from Ueda. But it goes to show, Tom, they're still on the back foot in terms of momentum for the U.S. dollar. Take a look at the longer-term chart in my next visual here. We hit the lowest since 2023 yesterday, and we have to go, if we breach that, we have to go all the way back to 2022 to find a similar level. We're still down over 8% from those January highs, and if you look at the RSI indicator, that's the relative strength indicator, we're the lowest in 7 years. So momentum is still on the back foot for the U.S. dollar. We're giving a little bit of reprieve in today's session so far.
Despite the reprieve, it may be short-lived for the US dollar. Bloomberg's Valley Titel, thank you. Now to the geopolitics in terms of the conflict between Russia and Ukraine and the meeting, of course, that they had in Istanbul yesterday. Both countries then laying the groundwork for a new prisoner exchange. That's after a second round of direct talks in Istanbul failed to bring the two sides closer to actually ending the war. It comes one day after Kyiv staged one of its boldest aerial attacks inside Russia. For more, let's bring in Bloomberg's Greg Sullivan with the latest. Greg, was anything achieved in terms of moving this conflict closer to a close, in terms of a ceasefire, in terms of a pause of fighting? Anything that came out of the meetings between the two sides yesterday?
Well, on the face of it, it appears that we are no closer to a ceasefire agreement. The two sides met for what was relatively a short time, and the biggest agreement that came out of it, like the earlier meeting in May, was a prisoner exchange, a swap of prisoners who were heavily wounded or very young, as well as the war dead. Now, that said, the two sides did exchange memorandum laying out their positions to reach a ceasefire. The Russian side handed Ukraine a two-part memorandum that Ukraine said that they would study, and Ukraine also proposed a meeting later this month. So, again, it's mostly the prisoner exchange that came out of this rather than any progress towards a ceasefire. And it's also good to note that this is happening against the backdrop of increased intensity in the fighting. Russian missile and drone barrages have increased. And, of course, there was that audacious attack that Ukraine pulled off against Russian airfields inside Russia. So increased fighting, very little progress towards a ceasefire, at least publicly. And the biggest takeaway, again, is a prisoner exchange here.
Greg, did the same sticking points come up with these talks? Is it about territory? Is it about the territorial demands of Russia, or are there other elements in terms of how this story has evolved?
Absolutely. That is a key point. And of course, there are other elements. Ukraine has been demanding a 30-day unconditional ceasefire. Obviously, Russia has not agreed to that. They have been resisting that. But from the Russian side, their demands are quite serious. There's that territory demand that you mentioned. They want all of 4 territories that they don't currently control and haven't militarily been able to take. They want Ukraine to withdraw from those territories before a ceasefire can start. They also want neutrality for Ukraine. They do not want Ukraine to be part of NATO. They want them to be a neutral country. And Russia has also laid forth a demand that Ukraine hold elections before any ceasefire starts. So these are very steep demands and very hard for Ukraine to accept all of them, at least from where we stand today.
OK, Bloomberg's Greg Sullivan, thank you for the latest update in terms of those talks between Ukraine and Russia in Istanbul yesterday. Here's what else we'll be thinking about today. 7:30 a.m. on the data front. We're going to break you down the Switzerland inflation story. So Switzerland CPI, that drops, and we will break that for you at 7:30 a.m. At 8 UK time, the OECD will publish its economic outlook report. We'll bring that to you as well. And at 10 a.m. UK time, we're going to get Euro area CPI, with inflation increasingly moving closer to the ECB's 2% targets. You can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go on the terminal. Coming up, South Korea votes for a new president who will face the challenges of uniting a deeply fractured country. And navigating President Trump's trade tariffs, we are going to bring you the latest live from Seoul after, of course, the ruptures politically in South Korea. That's just ahead. This is Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
The risk was a downside surprise, the reality an upside surprise.
The shock has affected outcomes.
There's a pretty big cliff from an economic perspective.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
American exceptionalism continues.
This is not what we're going to experience in the upcoming months.
Is it going to be Biden data or Trump data?
The May Jobs Report, Friday on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now, South Korea's financial markets are closed today as the nation votes for a new leader. The election was triggered after an attempt, of course, by the now impeached former president Yoon Suk-yeol to impose martial law at the end of last year. Asia Trade co-anchor Sherry Ann joins us now from Seoul on the ground for us. Sherry, what are we expecting today then on election day in South Korea?
Tom, finally an end to 6 months of political turmoil and a leadership vacuum that saw 3 acting presidents go by. I'm right now inside a polling station in central Seoul, and we can see voters just behind me right there. More than 12 million have already cast their ballots today for a total turnout of more than 60%. And this, of course, after already more than 15 million people cast their ballots in early voting last week. So the interest in this snap election is high. Of course, you mentioned the political constitutional crisis that South Korea has seen for the past few months. We have seen protests pro and against the former president, frontrunner Lee Jae-myung, and other leading candidates like the ruling party's Kim Moon-soo have vowed for more stability in the country if they get elected.
Sherry, on the domestic front, the focus on the economy, yes, assets have performed quite well in South Korea, but the economy is challenged. I mean, what is the current state of the economy? What's going to be top of list for whoever wins in terms of addressing some of those economic challenges?
It's a fragile economy here in South Korea. Not surprising, the Bank of Korea actually downgraded its growth forecast to 0.8% this year from 1.5% just in February. Of course, we have the ongoing trade tensions with Washington, and that will be a key priority for whoever wins this election, getting to a trade deal with President Trump. We have these 25% tariffs on all Korean shipments, of course, dialed back to 10%, but only temporarily. So exports have already stalled, contracting for the month of May. We have seen also GDP for the first 3 months here in South Korea shrinking this year already. The Korean market, though, as you said, assets have rallied because this could bring an end to the political turmoil that we've seen in the past few months. So expectations of perhaps even more corporate governance reform that has been pledged by all candidates across the board. That could help markets here in South Korea. The Kospi just rallied 4% last week. We've seen gainers beyond just say semiconductors and heavyweights in the tech sector. For example, Samsung, that has a Kospi weighting of about 16% now, is down from more than 20% just last year. This is, of course, the most valuable stock in South Korea.
Sherry, on foreign policy, where are the splits most evident between the most prominent candidates, the key candidates, in terms of the divisions around foreign policy?
That's interesting, right, Tom, because that's where we're seeing a different approach from the leading candidates here in the presidential election. Because when it comes to economic policy, when it comes to stimulus measures, everybody wants to spend more, which is also why we saw Korean assets rallying. Everybody wants to support the tech sector. They want to do more for housing. But when it comes to diplomacy, that's when you see different approaches. Lee Jae-myung of the opposition Democratic Party wants a solid alliance with the United States, but that approach is nuanced because at the same time, he wants stable ties with the likes of China and Russia as well. In fact, he has said that he doesn't want to be unilaterally bound to America. He doesn't want unnecessarily hostile relations with the likes of China and Russia. He also wants to engage with North Korea in dialogue, a little bit tricky given, of course, a deepening alliance between North Korea and Russia now. When it comes to Kim Moon-soo of the ruling People Power Party, we know that he has a traditional conservative approach to diplomacy, perhaps very similar to what we saw from the ousted President Yoon Suk-yeol, a strong alliance with the United States, a strong alliance with Japan as well. When it comes to China, a little bit more cautious. When it comes to North Korea, a hardliner.
Okay, a hardliner on North Korea. So divisions when it comes to foreign policy and the domestic economy in focus as well. Bloomberg Shein in Seoul. Thank you very much indeed. An update there in terms of the importance of that South Korean election, given the political tumult that country has faced in recent months. Coming up, we're going to switch focus to what is happening when it comes to the chip space. TSMC says its profit will hit a record this year. A record. We're going to bring you the details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Taiwan Semiconductor Manufacturing, TSMC, says it sees profits rising to a record high this year. The company's CEO told a shareholders meeting that TSMC's technology will remain secure amid global expansion. It is, of course, a key litmus test in terms of the story around demand, particularly for semiconductors in the AI space. Let's bring in Bloomberg's Annabelle Drulers right now for the details on these numbers. Annabelle, what stood out to you? So record profit, steady growth in an environment, of course, of trade tensions and question marks about China's ability to continue to absorb some of these semiconductors globally. What kind of stands out to you in terms of the numbers? What is propelling still this modest growth picture for TSMC?
Well, I think exactly as you say, it's sort of that contrast that TSMC is making between what it's seeing and then also this backdrop of really expanding global uncertainties. But essentially, they're just continue to be optimistic about the demand for AI chips, and they're saying that there are new growth drivers. For instance, humanoid robots is standing out to them. But in terms of what we got at the AGM, it actually reflected a lot of the same tones and commentary that we got in the earnings just a couple of weeks back. But yes, you said that prospect for record profit this year. They're still saying that the sales growth outlook for 2025 is going to be around 20% growth. That is in US dollar terms, so important US dollar terms, because we've seen a really rapid appreciation of the Taiwan dollar, and that they're saying that that's actually having a bit of a bearing on their operating margin, rather, that's fallen by more than 3 percentage points of late. Also, some commentary was interesting around the energy space, because Taiwan recently shut down its last remaining nuclear reactor, and so there's a really big question around energy security on the island, where they're saying they're going to be using as much renewable energy as possible going forward, and also they support the local government's plan to start collecting carbon fees in 2026. Lastly, on the AGM, you also mentioned the global expansion. There was some reporting we had from Bloomberg saying that TSMC was considering or had plans for a factory in the Middle East, even if groundbreaking could be several years away. C.C. Wei, the CEO, did respond to that, saying that there's nothing actually in the works right now.
Okay, yeah, some colour in terms of the energy piece and, as you say, the strength of the Taiwanese dollar. Really interesting as well in terms of these numbers. Briefly, Annabelle, in terms of XAI, Musk leaving the White House's official role or unofficial role and quickly and pretty rapidly raising additional capital, at least looking to raise additional capital for XAI.
Yeah, I guess it's been a really rapid move from the streets of Washington right back to Wall Street, because he's back on the fundraising path for his businesses, and now we're hearing that he's looking at selling $5 billion in debt for his AI startup XAI. So what we're hearing from people that are familiar with the matter is that Morgan Stanley is shopping the debt, and in terms of the package, it could include a floating rate term loan, a fixed rate term loan, and senior secured notes. For the pricing side, they're saying that at the early stage, it could be 7 percentage points over the benchmark for the floating rate term loan, roughly 12% yield on senior notes as well. But certainly this financing, again, $5 billion in debt, could help them be spending aggressively on AI infrastructure.
Okay, Bloomberg's Annabelle Drulis, thank you very much indeed with the latest there in terms of XAI's updates, in terms of fundraising and TSMC as well. Coming up, we're going to dive into the markets with Alexandra Ivanova from Invesco. Stay with us for that conversation. That's next. This is Bloomberg. Good morning, this is Bloomberg Daybreak Europe. Happy Tuesday, everyone. I'm Tom McKenzie in London. These are the stories that set your agenda. The White House says Presidents Trump and Xi will likely talk later this week. Investors watching for whether the phone call will see a dialing down of trade tensions. China's manufacturing slump. The sector slides to its worst reading since 2022 as US tariffs hit the country's smaller exporters. Plus, Poland's Prime Minister Donald Tusk looks to shore up support with a vote of confidence after his candidate for president crashed to defeat at the weekend. Let's check in on the markets then. The Asian session focused on that China data, weaker across the board when it comes to the Caixin manufacturing picture, but that is building expectations of additional stimulus from policymakers in China. Here in Europe, futures pointing higher by 0.1% after some modest losses by the end of the close yesterday on the Stoxx 600. Here in the UK, the FTSE 100 looking to add just 9 points, pointing higher by 0.1%. S&P futures stateside after gains of around 0.4 yesterday, pointing lower by 0.3%. Nasdaq 100 futures also off by 63 points. Let's flip the board and have a look cross asset. There's some stability this morning in the Treasury market after a sell-off again yesterday across Treasuries. You saw the 30-year yield crossing back above 5%. You saw yields up about 6-7 basis points on the benchmark 10-year today. The 10-year is yielding 4.42. Yields just down close to 2 basis points. A little bit of relief around an auction in Japan on the 10-year, well received, and so that is leading to a little bit of stability in the Treasury markets. 114 on euro dollar. A little bit softer in single currency, down 0.2% as the dollar picks up a bit of steam after the losses of yesterday. Brent adding to the gains of yesterday, up 0.2% on oil, and gold selling off by 0.6% after strength of yesterday in that haven move. Some of that is being paired in the session today, 3,360 per troy ounce on the yellow metal. Let's get more details in terms of how to think about these markets with particular lens on credit and rates. I'm very pleased to say I can bring in Alexandra Ivanova, fund manager at Invesco. Alexandra, thanks for joining us in the studio.
Morning.
Let's start with the story. It's a big week in terms of the data coming out of the US. So we had the manufacturing gauge coming in softer out of the US. We've got jobs data, JOLTS, so the job openings, and then non-farm payrolls on Friday. Are we starting to see a turn in terms of the data in the US? Should we start to brace for a softer US economy, or is that relative stability still there?
Well, I do think that given all the uncertainty, I wouldn't be surprised that the data might start surprising to the downside. But so far, it has been quite resilient. The labor market has been surprisingly strong. And our expectation is that we might see the payrolls to come down and step down a little bit from the last 3 months. But it still shows some resilience in the U.S. economy.
OK, so a little bit of softening, but still that resilience, not major cracks at this point. Are the trade tensions proving a crack? When it comes to the credit space, how do you trade these trade tensions, and what positions would you take if we get a renewed détente between the two presidents, if indeed a phone call happens this week?
Well, the credit market has been absolutely strong, and the demand and the technicals are still there. And I think given the volatility in other risk markets, credit has been quite resilient in that sense that if you look at the risk-adjusted returns on credit and credit spreads, given where the yields are for yield investors and income investors, it's a nice place to hide. Probably not to go too far in the back end of the curve, but in terms of investors looking for good quality yield, quality credit is actually still doing okay. Fundamentals are weakening, and we are seeing in some of the earnings calls that we have seen, but overall it's still resilient.
Regionally, where does that take you then on credit?
Oh, that's a good question. I do think that European credit looks quite attractive. However, the valuations do reflect that. And if you think about investment grade, we are still dependent on the duration of the bonds and underlying curves. And given where the inflation is coming down, ECB is still in the easing path. Obviously, we also have ECB this week. And it makes sense to still stick with the investment grade in Europe. Having said that, US, it's also starting to look attractive because the valuations have detached from other credit markets because of the whole US exceptionalism or not being there, people starting to sell some US credits. But I think that there are places where you can get good returns.
Okay. On the sovereign story, on the rate story, when it comes to the US, given the tax bill that is working its way now through the Senate, and we'll see if they meet that July the 4th deadline that the president has imposed, the White House has imposed on themselves. To what extent are we getting to a kind of make or break moment for the bond markets in terms of a tax bill that could add potentially $3 trillion to the US deficit?
Well, that's where the back end of the curve is very nervous about it, right? So we have seen the rate sell off, and as you mentioned, we are above 5% again. So this is where I do think that a lot of investors are questioning whether the debt sustainability, the budget deficits will continue in this trajectory. And it seems to me that it's going to be a feature in the next couple of years. But I do think that in some places where you have a longer duration assets, say Japan, you were talking about how the auction has been received quite well. That is a relief. And I think that's kind of indicative of the fact that we are starting to stretch the valuations, and it is attractive. For example, I was looking at the 40-year JGBs, and if you hedge it back to euros, you're getting 4.8% yield. That's actually higher than some of my credits in my portfolio. So you just have to be cognizant of what kind of risk you're putting in your portfolios, whether you're doing credit risk and default risk versus the volatility risk and some of the long end, the duration risk.
Yeah.
So.
Oh, that's really interesting. And the Japanese bond market and the auctions there now having that kind of global impact. And you're seeing potentially yields of 4.8% if you hedge around the euro on the 40-year.
It's 7% if you hedge it back to sterling.
Wow. Okay. So 7% if you hedge it around to sterling. What other opportunities are you finding in terms of sovereign? And I guess the question before I get to that point is on Treasuries and on the back end with the 30-year. Is there a level at which yields get to whether it's 5.5, 6, that then just there's an automatic function where fund flows move back in because you can't avoid wanting to lock in yields at that level? Or is the glide path just clear in terms of high yields on the back end?
No, I do think there is a level because as the rates continue to rise, it's going to be much more difficult to fund yourself, becomes a problem for the Treasury, and they are paying attention to this. And I do think that there is some levers where you can say you can change the composition of your issuance, you can get funded more in the front end. So there is a supply and demand dynamic that is driving these yields much higher. At some point, and I do think that we are getting close to it, my target is around 530 to start buying the back end of the U.S. curve. But it's a little bit early, and I'm still cautious. And if you do buy it, you buy it for a trade.
Okay, 530 would be the target on the 30 in the U.S. Just briefly on equities, you're still steering clear of U.S. equities, so structurally long non-U.S. markets. Is that a play around optimism on Europe, or is that your views on negativity around the US? What would have to change that dynamic for you?
It's mostly the relative view. I would say that US exceptionalism is still there, and I always worry that if you go to one side, yo-yoing from being too positive to too negative is quite a dangerous place to be. And if you see my notes, it's the most boring allocation where you have the beta is one or neutral everywhere. But within each asset class, you do get some pockets of opportunities. And this is where I think Europe has also coming out of a little bit of a slow patch. so growth is going to be slightly better. We do have some fiscal expansion in Germany, of course. And then at the same time, U.S. will be catching down, so the growth differential is going to be shrinking. And then you also look at the size of the European equity markets and the size of the U.S. Still, the liquidity is much better in the U.S., so that you have to consider it for a long-term investor. But the impact, so just the fund flow into Europe could be positive.
Okay, so a catch-up for Europe, not necessarily a catch-down for the US. US exceptionalism
both.
has
a
not.
little bit of both.
A bit of both, okay. Yeah. Alexandra, thank you very much indeed. On the credit markets, rates and, of course, equities as well. Fund manager at Invesco with a view on these markets. To the tech space now, Microsoft cutting hundreds more jobs just weeks after its largest layoff in years. More than 300 employees were told their positions had been eliminated on Monday. That's according to a Washington state notice reviewed by Bloomberg. A Microsoft spokesperson said the latest headcount reduction is in addition to the 6,000 job cuts announced last month. And Disney is laying off several hundred employees across its film and TV businesses in a sign the entertainment industry's contraction is far from over. Disney has eliminated over 8,000 jobs in recent years as it works to cut expenses by $7.5 billion. And Uber has named longtime executive Andrew McDonald as its first chief operating officer since 2019. McDonald will oversee both the mobility and delivery businesses. The move is part of an executive shake-up at Uber, which includes the departure of the senior delivery vice president and the promotion of 3 long-serving employees to the leadership team. Coming up, Polish Prime Minister Donald Tusk calls for a vote of confidence after an electoral defeat over the weekend. We're going to have those details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, Polish Prime Minister Donald Tusk says he will seek a vote of confidence. That's after the candidate backed by his party was defeated in Sunday's presidential election. Tusk spoke about the election's outcome.
Over 20 million Poles elected a new president of the Republic of Poland, showing their strong commitment to democracy and its key principle, free and universal elections. No matter how we judge the winning candidate, we should recognize his victory and congratulate his voters, which I hereby do. I also thank the loser for his determination and fighting for every vote to the end.
And Oliver Crook, who was on the ground for us in Warsaw yesterday, of course, to cover those elections, joins us now for the latest in terms of the political fallout of this election, or at least the realignment that we're seeing now in Poland. What is Tusk's motivation, Ollie, for calling a confidence vote? Does he need to call this vote at this point?
He wants to demonstrate before lawmakers, before the whole world, that there is still a mandate within the government, that this is a vote that he really believes that he's going to win very comfortably. This is not the sort of thing that is going to sort of bring down the government, but it does follow, Tom, as you say, the loss of his ally, the candidate that he really wanted to win in that election, the person who would have made his legislative priorities possible to defeat to the Law and Justice Party, the far-right, nationalist part of the Polish political spectrum that basically now creates a huge amount of gridlock within Poland because the president has a lot of veto powers over everything that the prime minister would like to do. Donald Tusk is still this sort of prominent political force, but he can be basically blocked by a lot of his priorities by the president. And at the end of the day, he's going to have to figure out how to navigate that landscape. We are also going to expect a reshuffle of the government to maybe streamline things a little bit. We also heard from Donald Tusk saying also that he wanted everyone to see, including his opponents at home and abroad, that we are ready for the situation, that we understand the gravity of the moment, but we do not intend to take a single step back. He may not take a single step back, but it's going to be very difficult to see how he's going to manage to take steps forward, particularly feeling the heat as he is coming from the far right at a time when Poland was really going to change its trajectory and sort of unlock a bunch of EU funds and sort of his liberalizing agenda. That basically comes potentially to a dead halt. He needs to figure out what his plan B is, and that is what he's assembling now.
Yeah, how to enact that agenda, given the potential opposition he now faces from the newly elected president. Meanwhile, elsewhere in Europe, Ollie, and I know you've had your eyes on this, is the Netherlands, where this coalition is potentially at a risk of a collapse. Relatively new coalition, of course, in the Netherlands in terms of historical context. And this comes down to migration. What are the dynamics at play here?
And Tom, this is the perennial issue that is threatening to pull down the government in the Netherlands, sometimes every few months. It's what brought down the government almost exactly a year ago, 11 months ago, when Mark Rutte left to the Netherlands to become a NATO Secretary General, and now is being led by a sort of three-party coalition, the biggest party of which is the Freedom Party that is led by Geert Wilders, who has now proposed last week, put in front of the parliament, this 10-point immigration plan. And he says that basically if most of these points are not adopted, he is going to pull the plug on the government, going to bring down the Dutch government. So just to give you a couple of the points within this 10-point plan, he wants to, for example, use the army to guard land borders around the Netherlands. He wants to turn away all asylum seekers. He wants to halt temporarily family reunification, sending Syrians back to Syria. These are the kinds of initiatives that we were expecting, really, from this far-right sort of anti-immigration party of Geert Wilders, but is causing a lot of problems within this legislation, does not have the support. And as of yesterday, he says, if you do not adopt this, I'm going to pull the plug on the government. And we should say this is the thing that keeps coming back again and again in the Netherlands, just 3 weeks before the Netherlands is meant to host Donald Trump in this NATO meeting. So again, when you think about sort of the Brussels perspective on both of these stories, both Poland and the Netherlands, they really would like to see a strong, stable, pro-EU government. That is not what you have over the last 24 hours.
Yeah, and that is the important broader context, isn't it? Thank you. Oliver Crook, of course, with the latest in terms of the political shapes and tensions within the Netherlands and the reworking, of course, of the political map in Poland. Ollie, thank you. Now, the Trump administration's trade war with China, meanwhile, has many European regulators and retailers bracing for a flood of ultra-cheap Chinese goods. Good for inflation, maybe, but a tide of products from e-commerce platforms such as Shein and Temu may not be coming, at least not yet. Bloomberg's Sonia Wind is here to discuss, has been writing about this. So Temu and Shein spending heavily in Europe. We know they have a footprint here and exposure, of course. Are those efforts now paying off?
Well, based on our reporting, we're seeing real tension between what the platforms want and what the sellers are doing. So Temu and Shein, they have really poured money into advertising campaigns. They even offer to subsidize the shipping costs into Europe. But the sellers are more hesitant and they don't seem to be convinced. That's because the US is a really lucrative, uniform market compared to Europe, where we have multiple languages, different rules and regulations, and that makes it much harder to scale fast in this region. So for now, we are seeing this mismatch between the ambitions of the platforms and what the sellers really want.
OK, and we'll see if they can close that gap, which is interesting, isn't it, in terms of the tension between the sellers, most of whom, of course, are in China, and the platforms themselves, Chinese-based platforms. How is Europe then potentially preparing for a possible surge, if it comes, a tidal wave of cheap imports?
Yeah, so Europe is definitely trying to get ahead of it. And while we're not seeing a huge influx of cheap Chinese goods now based on these US trade tensions, we have been seeing a massive rise in the past years of low-value parcels that have entered the European Union and also the UK. And that is a problem because many of these products are not compliant with EU regulations. So the regulators are also under pressure from local retailers to do something about it. And something that they have been doing is ramping up the custom checks to prevent, laser pointers that exceed power outage by 300 times to stop them from coming into the market and harming consumers. Another thing they have been doing is discussing the end of the de minimis rule, which allows the tax-free import of low-value goods into Europe, something that the US has now done. So they're definitely cracking down. And once it might become necessary for Chinese sellers that are still hesitant now to come into Europe, they will definitely be walking into a more strictly policed environment. And it also seems that Temu is aware of that, and they're trying to combat this new reality by increasing the share of local merchants. So they said by the end of the year, they want 50% of the products to come from the UK, and that's a model they plan to roll out across Europe.
OK, we'll see if that comes to fruition. Bloomberg's Sonia Wind with that reporting, and well worth a read on the Bloomberg terminal, of course, and on Bloomberg.com. Sonia, thank you. In other news, Italy's Mount Etna erupted yesterday, setting off large clouds of smoke and causing tourists to seek shelter. You can see some pretty dramatic pictures there. The country's National Institute of Geophysics and Volcanology reported volcanic activity of high intensity, which it said had also caused the collapse of part of the volcano's crater. No casualties have been reported, and there has been no impact on flight activity so far. Located in Sicily, Mount Etna is Italy's biggest volcano and one of the world's most active. Local media say the latest eruption is the most intense since 2021. There's plenty more coming up. I'm going to break down some of the data we expect out of the US and the jobs picture, and reflect again on the factory gauge out of China, with manufacturing data slumping when it comes to that Caixin survey. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. It's a big data week in terms of the focus on the US with jobs data, and we'll get to that. But manufacturing data came out yesterday, and really in focus was the division in terms of exports and imports. You are seeing the impact now from tariffs. Imports falling to the lowest level in about 16 years, falling to the lowest level, 16-year low in terms of imports into the US. That's the white line here. So those are contracted pretty significantly. When it comes to exports, the biggest drop in about 5 years for exports. So in terms of the import story, interestingly, because at the beginning of the year, you did see that pull-in of imports by companies trying to get ahead of the curve in terms of the tariff story, trying to build up these inventories. That now seems to have come to an end. And you saw manufacturing for a third straight month, top line manufacturing out of the US, softening for the third straight month in the month of May. But again, the export and import story pretty dramatic when you lift the hood. Let's flip the board and have a look at the job openings picture, because that comes through later this week, of course. Then you have non-farm payrolls on Friday. Bloomberg Economics actually thinks you could get, in terms of the ratio between job vacancies and those looking for work, that number, that ratio could actually drop below 1 for the first time since COVID, since just after COVID. That's the expectation from Bloomberg Economics, as the labour market does start to soften now in the US. So the job openings number is going to be consequential as we lead up to non-farm payrolls. Meanwhile, in China, we may get that phone call, of course, between the two presidents. It may or may not happen this week. The White House certainly hopes it will happen. Worth reflecting on the Caixin data when it comes to manufacturing, because that has really softened pretty dramatically and surprising, particularly when it comes to the small and mid-sized companies that the Caixin survey gauges. So plummeting in terms of the manufacturing story in China. A little bit of weakness then, and a softer hand maybe for Beijing as it heads towards those conversations on trade with the Trump administration. The opening trade is up next. This is Bloomberg.